It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Hi, welcome to Bond Bite Special on RBI policy rate hike, which is out of turn. I'm Arjun Parthasarathy. And in today's sudden decision by the central bank, the RBI raised its interest rates for the first time in many years. And it indicated that rate hikes are going to go higher. It's going to raise more. It's going to raise rates higher as we go along. In fact, today they raised interest rates by 40 basis points or by 0.4%. And in June, we expect RBI to raise interest rates by 0.75% or 75 basis points. And with this, they also took money out of the system by hiking the cash reserve ratio rate by 50 basis points or 0.5%. This cash CRR rate hike will take out around rupees 87,000 crores or rupees 870 billion from the domestic money market system. And so with all this, markets are extremely volatile. GSEC, 10-year GSEC yield rose very sharply to 7.4% from 7.15%. The markets were completely taken unawares by this announcement. RBI didn't reveal that they even met in the 2nd and 4th of May. And so they came out with this. The Sensex and Nifty fell sharply. Only solace was the rupee that actually gained. It actually gained because of the fact that interest rate differentials between India and the rest of the world is rising. And markets, and typically when this happens, there are more inflows expected into Indian rupee. But this is if risk aversion continues, rupee is also going to face the pressure. And so going forward, it is going to be a question of high inflation and rate hikes. RBI is almost seems to be extremely worried on inflation. Now, in the last 1 month, inflation expectations have risen sharply. All goods and commodities prices have risen, especially food and fuel, and this is expected to increase as we go along. And inflation in March, CPI, the retail inflation in March was closer to 7%, and maybe in April the inflation could rise very sharply higher. And this is what prompted RBI to suddenly raise interest rates. So what does it mean for investors? So investors have been at a wrong end in all markets. Equities have fallen very sharply and this year they have not given any much of returns. The bond fixed income also has given very low returns, especially in FDs and mutual funds, largely because of the fact that interest rates have gone up and underperformed inflation. Except for a few bonds that have stayed steady because of its higher yields, all other bonds have actually seen prices fall or yields rise. And so in fact, investors have not much. And with all this, inflation is really hurting domestic households, and so hence investors have not really much to be very happy about in this year. So they would have to factor in much higher interest rates as we go along, and with inflation not looking to come down at all, at least for the near future. And if this is going to be get into more of a structural kind of inflation, because once inflation goes up for goods and services, then wages too will go up, and with wages rising, then everything else goes up as well. So this can be a very difficult time for investors. So INR bonds obviously is on top of the whole thing, whole inflation rate hike scenario. We have been telling the market in Bond Bites in search for yields and our various other interactions to Twitter Spaces and every other interactions with with the general public through various channels, podcasts, and YouTube and others, that interest rates will rise, inflation is very rising, and central banks, including the RBI, has not reacted sharply enough, or not reacted at all to this sudden expect a rise in inflation. And so this kind of a very sharp and sudden move can send out wrong signals to the market, which may start to doubt whether policymakers are in control of the whole situation. And this includes the Fed and the European Central Bank. And markets could expect even a 75 basis points rate hike by the Fed in this month and next month, if it comes to that. So it should be markets will be will be on high tenterhooks, and investors will have to stay extremely vigilant. So INR bonds is hosting very um, uh, s- uh, a very insightful webinar on inflation and rate hikes and where to invest in fixed income uh, given inflation and rate hikes. It is on Friday, the 6th of April at 11 a.m. The registration link is given in the description below. And as always, if you download our Quick Invest by INR Bonds app from Android and iOS stores, all the bonds that are listed have the most information. A lot of bonds have been protecting investors against inflation and interest rates as well. And many investors who have used our platform, INR Quick Invest, have found that investment is, while being very informative, easy, and very easy to invest in bonds, has also helped them to realize that they have been better off than investing elsewhere. So download the app now, and do not forget to subscribe to your YouTube channel for more such special coverage of policies and market moving events and other uh, aspects that we put out on various issues surrounding the markets. And do hit the like button if you if you appreciate what we are doing for on bond guides. Thank you very much.